Well, the Reserve Bank has decided to keep interest rates on hold again over June. Interest rates have now been on hold since the last rise, which was in August last year. And the Reserve Bank has indicated really that in the near term at least, interest rates are likely to remain at current settings. And that reflects that generally mixed economic news that we've had and are having over the last month and really over this year. We've seen an improvement with unemployment. Well, unemployment's been flat, but we've seen jobs growing, so employment growth coming through recently. But look, unemployment rates remain stubbornly high in some states. We've seen building approvals moderating over recent months, but they're still significantly higher than a year ago. But look, most of that increase in activity has come in the unit market, and units really tend to have a more of a longer term effect on imbalances in housing market supply and economic activity. We've seen latest wages growth benign. We're actually seeing real wages falling at the moment in the economy, reflecting that low inflation economy. We're also seeing the stock market rising steadily, but really not with any sense of confidence or speculative activity. Also, the dollar has settled in a mid-range, probably a little bit higher than what the Reserve Bank expected. So look, there's a lot of factors here really that are pointing to the Reserve Bank continuing to have a wait-and-see approach in terms of future interest rate policy. And look, housing markets, after showing some weakening over the March quarter, have maybe shown recently some invigorating impact. We've seen clearance rates in Melbourne and Sydney rising over the past month, and Adelaide and Brisbane are also showing increased buyer activity. But we should see prices growth coming through as a result of that, but it won't be at those strong levels that we had last year. So again, another factor that the Reserve Bank will take into consideration. So I think really the outlook for this year particularly, and maybe further on, is for interest rates to stay where they are right now.